Investors have been concerned by volatility in the marketplace, as well as the fact that the large cap US market has become very concentrated. The Pender US Small Mid Cap Equity Fund offers investors an opportunity to participate in a market that's very compelling right now. Risk is definitely a very important thing that we are focused on in the fund, and we protect investors' capital by making sure, one, we really understand the business we are investing in. We invest along with management teams that we believe have the capability to identify growth opportunities, as well as whose incentives are aligned with us as minority shareholders. And lastly, we invest in businesses that are in growth industries. So, even if the GDP growth slows down for the economy as a whole, being in parts of the economy that are doing well offers them some downside protection. The other key tenet of the investment framework is before we invest in a company, we try to build various scenarios. And as much as we are focused on the upside, we are also very focused on what the downside could be if things don't pan out as we expect. And we are only going to invest in a business after we are very comfortable with the downside. We are very focused on balance sheet strength, so we want to make sure these businesses have the capability to go through a down cycle if things were to turn bad, because they have the cash flow or the strength in their balance sheet to survive periods where maybe they're not doing as well. And we build the portfolio based on weights that are assigned based on the risk-adjusted return of the businesses that we are investing in. So again, we want to make sure we are comfortable with the downside before we invest in a business. The Pender US Small Mid Cap Equity Fund tends to take a long-term view on businesses, and we actually view short-term volatility in the marketplace as an opportunity to either add to our holdings, or in cases where the market has run up ahead of what the intrinsic value of the business might be, we are happy to trim good quality businesses as well, because we've seen over the years, over my 25 years investment career, that the market tends to get overly optimistic at points and overly pessimistic at points, and we as long-term investors see through that. We form a view on the long-term value of the business, and when we see the stock trading in the short term either above or below that intrinsic value, we trade the stock accordingly. I mean, we do want to stay invested in good quality businesses, but at the same time we are mindful of the opportunity in terms of returns for the investor. So we're not blindly staying invested. When we see the market has become too optimistic, we are happy to trim as well. So we see short-term volatility as an opportunity to generate additional returns from owning these great businesses over the long term.